Welcome to The Explainer. Today, we're going to tackle a system that quietly shapes just about everything in our daily lives and our future, the financial markets. We're going to break down exactly how this powerful economic engine really works.
So, let's kick things off with a question that probably hits close to home for all of us. When you put money away, into a savings account or some kind of investment, it doesn't just sit there in a vault. It actually goes on a pretty incredible journey.
And then on the flip side, have you ever seen a huge new building go up or read about a tech startup getting millions in funding and just thought, where does all that cash actually come from? Well, the answer to both of those questions is found in the very same place.
All right, let's get into the mechanics of it. At its absolute core, the financial market really only exists for one reason: to connect two fundamental groups. It's all about making sure money flows from one place to the other. First up, we've got what economists call surplus units. Now, that's just a fancy way of saying savers. This is pretty much anyone, you, me, our families, even big companies, who have more money than they need to spend right now. They've got extra cash that they want to put to work.
And on the other side of the coin, you've got the deficit units, or as we'd call them, the borrowers. These are the entrepreneurs with a game-changing idea, companies that want to build a new factory, or governments that need to fund big infrastructure projects. They need capital to make things happen. And this is exactly where the financial market steps in. It's the vital bridge, this huge regulated system that connects the savers with the borrowers. Its main job is to channel all those funds from people who have a surplus to those who can use it for productive investments.
Now, it's really important to get that this market does way more than just connect people. It has three huge jobs. First is price discovery, which is just the process of figuring out what an asset is actually worth through buying and selling. Second, it provides liquidity. This means you can easily turn your investments back into cash, which is crucial for confidence. And finally, it reduces costs, making it way easier and cheaper to find someone to trade with.
Now, to really get a handle on how this all works, it's super helpful to think of the financial market as two distinct worlds. And the line that divides them is really simple. It's just time.
So here we go, a perfect breakdown. On the left, you've got the money markets. This is all short-term stuff, for assets that mature in a year or less. Think of it as a place to just park your money, where it's safe and you can get it quickly. On the right, you have the capital markets. This is the long game. This is for investments that are meant to fund growth for years, even decades to come. It's about building the future.
So let's zoom in on the capital market, because that's the one you're always hearing about on the news. Let's see how it actually builds wealth and funds those huge projects. It does this mainly through two key instruments. So when a company needs to raise that long-term money to grow, it really has two fundamental choices, two main paths it can take to get that funding from people like us. And this slide breaks it down perfectly. A company can sell stocks, which is called equity. When you buy a stock, you're buying a small piece of ownership in that company. Or it can issue bonds, which is a form of debt. With a bond, you're basically giving the company a loan, and in return, they promise to pay you interest and give your money back later. So it's a choice, ownership versus a loan. It's also super important to understand where these stocks and bonds are traded. The primary market is like the launch pad. It's where a security is sold for the very first time, like in an IPO. This is how the company itself raises capital. But after that initial sale, the security lives on the secondary market. Think of this as the trading floor, like a stock exchange, where investors are just buying and selling those existing securities from each other.
So who are the actors in this grand play? Let's meet the main participants who make this whole system of money flow actually happen.
Okay, first, we've got households and individuals. That's us. We are the primary savers. Then there are the corporations and businesses. They're the main borrowers looking for cash to expand. In the middle, you have commercial banks, who are critical intermediaries, gathering up all our savings and lending them out. And finally, watching over the entire system is the central bank, which sets the rules and monetary policy to keep everything stable. Okay, so we've looked at all the parts, and we've met the players. Now let's just zoom out and connect all these pieces back to the real world, and more importantly, back to you.
This quote really says it all. You just can't have a strong, growing economy without a healthy and efficient financial market. The two are completely, totally intertwined.
A great way to think about it is as the economy's circulatory system. It pumps capital, which is the lifeblood of business and innovation, from where it's sitting around to where it's needed most, all to fuel growth and create value.
So what's the real-world impact of all this?
Well, this system is what drives economic growth. It channels our collective savings into new projects and technologies, which ultimately helps raise the standard of living for everyone. And on a personal level, this is the very system that makes it possible for you to get a mortgage, finance an education, and build a secure financial future for yourself through retirement savings.
So, this complex engine is constantly working, powering our world in ways we rarely even see. But now that you've got a glimpse of the blueprint, it leaves us with a final thought. Whether you see yourself as a saver, an investor, or maybe even an innovator, what role will you play in it?